Great. Okay, good morning. So I hope you all had a good weekend. Looking forward to the week ahead. Been a pretty quiet start on the markets, and half of the reason for that is because actually you haven't been able to trade anything on Eurex. So if you're sat there trying to figure out why has my Bund ladder broken, well, it hasn't. The Bund and the DAX and the Eurostox and so on, all Eurex products are offline, and this is being blamed on some kind of technical issue in Frankfurt, and we are looking to get underway at 9 a.m. Okay, so for the Bund and the DAX and Eurostox and so on, these markets will open at 9 a.m. We're in the pre-open now, which takes 30 minutes. So 9 a.m. is the kick-off point for the week for Eurex. So those products have been out of action, which has just added to what is anyway a little bit of a subdued start to the week. We've obviously been through quite a few sort of headline issues in recent weeks, and hopefully today is going to be the last day, well, for as long as possible, where I mention Greece. So hopefully after today, because I do have to mention them briefly, let's make a deal. Let's not talk about Greece. Okay, let's move on. But also we've had the Chinese stock market collapse. We've had Fed stuff in the mix, and these have been the three big factors that have been weighing on investors' minds. It's the Fed, it's China, it's Greece. We're kind of just coming through, well, certainly two of those, with the Greek situation seemingly resolved for now, and it is only for now, but it looks like Greece are ready to, or have signed off the payment. So they're going to be paying 6.8 billion euros today. This is money that's going to go primarily to the IMF in order to pay back they're in arrears, of course. Several payments in June never got made, so they're going to make good on these arrears, and then of course they've got a big bill to pay to the ECB today, 3.5 billion today going to the ECB. It's the 20th of June. No, it isn't. It's the 20th of July, and this is the date for the big ECB debt redemption payment. This was the big one, in that if Greece had failed to make this bill payment, they would have technically defaulted, and it would have been carnage, except that they are paying it because they've managed to negotiate this bridge loan. Just keep your eye on oil. Just ticked up onto the high of the day. This was set overnight as things got going last night, 51.33, just making a new high now. R1 is in here also, so just keep your eye on crude oil on the move here. So Greece have paid their bill. One thing on Merkel mentioned over the weekend that she is prepared to talk about debt. Well, not debt restructuring. She's prepared. Well, debt restructuring. She's prepared to talk about lengthening maturities, perhaps reducing coupon payments, but she's not interested in writing off or taking a haircut on this debt. She said the only way that could happen is if Greece is not in the Eurozone. So, I don't know, positive, it depends how you interpret that comment. You could take it positively or negatively. But look, for now, let's just leave Greece to one side. They're okay for the next couple of months. I would say that Greece comes back as a major issue probably as we hit September. Okay, Tsipras has reshuffled the pack with kicking out the Syriza dissenters from the cabinet and bringing in new guys who are supportive of the path they've chosen. So some for once a bit of clarity on Greece in the couple of months ahead, but this will come back. There is negotiations that are going to be ongoing to talk about to nail down the 3-year bailout program and to agree on it, and most importantly it's going to be the debt restructuring issue. That's what the IMF want haircuts, Greece want haircuts, Germany say it's illegal and they can't deliver haircuts unless Greece leave the Eurozone. So that's the big issue that's going to come back to us in a couple of months, all right? But let's leave it for now. So just looking around these markets, so look, the S&P here, just ticking to a new high right now. It's a pretty slow open, but just very mild positivity going on here. You've seen actually that as I've been talking, the euro dollar's pushed high, so you're getting some dollar weakness helping with the commodity space. I'll talk about commodities in a minute. We're going to talk about gold this morning, which is perhaps the market of most interest, but you're just getting some dollar weakness, you're getting some commodity market strength, and equities are quite balanced. If we just look at the daily chart for the S&P, then as we drift through Friday's high, we'll just be aware of the high point for June. So June's high was at 21.22, so we're pretty much there. We almost got there end of last week, not quite. 21.22 as the only barrier between where we're trading now and the all-time high, 21.34. So we are just 14 points off the all-time high here. Now the Nasdaq has made an all-time high. And in fact, actually, when you take it, the S&P 500, of course, a much broader index than the Nasdaq. Friday's session tells a bit of a lie because the market actually finished higher marginally, plus 0.08% on the day. But actually, all sectors had a down day apart from one. There was only one sector in that index that had an up day on Friday. The only thing is, it was the biggest sector. So this is tech, obviously, and led by Google. Massive gains on Google as a result of their earnings delivered on Thursday night last week. And this is Google really shifting back towards, it appears anyway, shifting back towards more core areas of the business. You know, stop messing about trying to build a car that doesn't need a driver, and get on with focusing on stuff that actually generates revenue. So back to the core part of the business, which of course is advertising. It's click sales. So this was a big boost. I mean, Google share price was up 16% back end of last week. So this lifted the Nasdaq. Of course, it lifted the tech sector generally in the S&P 500. So whilst Europe had a down day on Friday, the S&P got away with it because of the tech sector delivering a strong performance. But we're right up here now. It's a really important week ahead, I'd say, technically for the S&P, because we're top of the range, and this range has been in play, right the way back since really the start of February. So we spent most of this year trapped inside this channel, and we're right up at the top end of it. So this week's definitely an important one from a technical perspective. With Europe, we gave back a little bit of gains on Friday once the kind of Greek deal was done. That the relief rally, we had 7 up days in a row on the DAX, and the relief rally just losing momentum. But keep an eye on the 23rd of June high. Yeah, actually, guys, sorry, I'm just seeing I gave you wrong information there. The Bund has now opened, so the Bund is open for business. I'm just going to check. I don't think the DAX has, so that's interesting. All right, the Bund's gone first here. Yeah, the DAX is not open, so that's a bit weird. All right, so you've got the Bund open here, DAX and Euro stocks yet to get going. All right, so Eurex seemingly just figuring out their problems. Let's talk about gold. This is perhaps the market that has been getting most attention over, end of last week, and then really certainly overnight. Check out the 5-minute chart here, looking at gold overnight. Big move to the downside, just around 2:30. Trading from 1,130 right the way down to 1,085. Big move here, and when you're looking at the long-term chart, this is significant because now, right here, right now, 5-year low. So gold, big spike to the downside, breaking some key technical support areas. A lot of this is technical. Gold was down 5% at one point, and this is, it seems to be triggered off the back of the news that China, for once, and this is quite a rare event, announced the amount of gold bullion that they own, and they have increased holdings by about 60% over the last few years, but this is a lot less than what analysts had expected. And so gold took a dive on Friday as a result of that. We tested the 2014 low, as you can see on the chart here. That held things up Friday, but that got taken out overnight, triggering this big move and the big breakout to the downside. So we traded down to $1,080. That is a 5-year low. Okay, so gold right in focus. And it's interesting because we've seen gold, through this Greek crisis, for example, you've seen absolutely no upside, no safe haven flow into the precious metal, which is confused some people, because if you go back to the height of the Eurozone debt crisis in 2011, well, this was the kind of safe haven of choice, and gold actually drove up to a new all-time high above $1,900 in 2011, thanks in part to the Eurozone debt crisis. But it's also an inflation situation, of course. The gold price heavily influenced by inflation. Back in 2011, the other major catalyst that took it to an all-time high was actually a very sharp increase in inflationary pressures globally. That's back in the days when UK inflation hit 5%. Chinese inflation was up at like 6.5%. Those days are long gone. If you compare that to today, well, inflation in the UK, is zero. In China, well, it's not far off 1%. So ultimately, yes, gold is still a safe haven, but without inflation to back it up, it doesn't really get anything going on the upside. I'd say, this is technically, of course, very bearish. We may well see a move down to test the psychological 1,000 handle. But I'd say this is a trade that looks interesting. It's almost time, I'd say. And the thing is, the inflationary situation is going to change as we turn towards the end of the year. And I think that once that inflation picture begins to tick back higher, then I think gold's looking pretty cheap. But for now, I would expect a bit more downside, and maybe $1,000 is something to look for. So gold definitely grabbing the headlines overnight, and the precious metal space generally. But another story to close on, and it's on the commodity. It's commodity related, and just thinking about supply and demand. And this is a story talking about a topic that's very close to a lot of your hearts, because the story is about beer. So, and this is a commodity, of course. Well, it is a commodity. But what I want to talk about is hops. Guys, we may have a problem. We may have a problem ahead of us. What we've seen in the last few years is a massive spike in kind of independent brewers, small breweries. This is massively taken off in the US. It's big time here in London as well. Micro brewers. And in the US, this thing called IPA, Indian Pale Ale, is suddenly, it's almost like hit craze levels. Now, we've been making IPA here in the UK, for well over 100 years, but it's kind of a new thing in the US, and you're getting huge amounts of microbreweries coming in, making this stuff, and it's the big trend. Now, the only problem is supply, because you probably don't know, but Washington State is one of the big producers of the aroma hops. This is what's used to flavour craft beers. These independent brewers use a hell of a lot more, about 3 times more hops actually, than the kind of big multinational brewers. And the problem is there's been a heat wave. There's been a heat wave coupled with the fact that the winter saw lower than average snowfall, which means there's water reserves are very low. So we've got a heat wave and not enough water to cool these hops. And these aroma hops need a lot of careful attention. They don't like heat, and you need to cool them, and if you don't have any water, you can't. So it's looking like we're kind of heading perhaps for a bad crop, which is going to be bad news for these microbreweries, because actually the price of these hops has anyway already doubled over the last few years. It's gone from about £15 per kilogram to about £30 per kilogram. So we may well be in the beginnings of a lack of supply. Now, if you're thinking about demand, why have these? Because the amount of supply in the US has dramatically increased, and in fact, supply, so producers of aroma hops, acreage being used to produce this has increased by 26% just in the last sort of 18 months. And this is because of the huge demand. The only problem is the demand side's tailed off a little bit because some of the big markets like China and Brazil are going through some economic difficulties. They're in economic austerity. And this has just tempered the demand side just as supply gets up to record ever levels. It's the classic sort of commodity cycle. Huge demand. You meet this ever-increasing demand with ever-increasing supply until you go a little bit too far and the supply gets too much and price comes back down. But what we've got here is actually declining demand and now potentially a sharper decline in supply because of weather-related issues. So what is the answer? I mean, how do you trade this? And I'm afraid it's difficult. It's difficult because you can't trade microbreweries. You can't short a microbrewery stock. These are privately owned companies. So I've come up with a solution. Because if beer is going to get more expensive in the next few months, then guys, there's only one answer. And that is we need to start stockpiling. And so I've just bought one of these little pups. And this is my new beer fridge. Now the only way is we've got to start buying beer. Buy it before it goes up, and then we've got a lot of supply that we can then sell off at a higher price. The only risk here is, of course, that your supply dwindles over the next few months because it's a little bit tempting to kind of get stuck into your own supply. But this is the way forward. We're going to have to start stockpiling. Now, just on this topic, I was at a Greek restaurant on Friday, and I ordered a bottle of beer because I wanted to start my stockpiling process. I ordered a bottle of beer, and then I realised that I ordered a very popular Greek beer, and I've realised that Greece have been crying out for help for many years. We just haven't noticed it because I took a picture of this bottle of beer. And given the economic problems in Greece, this is how they've been trying to cry for help across the globe. Fix Hellas. Hellas means Greece, of course. So they've been asking us to fix Greece for years via their beer bottles. It's just that, as it stands, nobody's. I guess Europe have stepped up. Europe have stepped up in that they've given them a bridge loan. But using the vehicle of beer to deliver messages, I like this. I'm going to be backing this idea. I think we should communicate via beer. This is my message. Okay. Let's see. Look, the Bund has opened. It's down. It's opening lower. It's hard to judge. I mean, U.S. equities are mildly higher. So Europe, of course, a lot of these equity markets are shut, but you certainly got Bund a touch to the downside. But it's the dollar and perhaps oil here that are currently on the move. Let me just check on gold right now, because I presume gold is, it's trying to lift higher, but it's actually pretty quiet. But you might get gold move back to test the kind of 7 a.m. high. But technical break above the overnight high for crude oil. Bit of dollar weakness. Now that's an important level on euro dollar. Let's just mention that before I close off. So the low we had on Thursday is the pivot level, and it's the downward trend lines. You had a triple resistance around 108.64, but it's not been enough to prevent a move. So we just had a little breakout above that technical level. But of course, big week for the dollar last week. The dollar climbed, not far off 2% across the week, actually. So we'll probably see that just consolidate now. But in terms of the session ahead, and indeed the week ahead, it's not great for US data, I'm afraid, this week generally. And indeed, there isn't any US data of any note today. What we do have, let me just look. Okay, actually, there's virtually nothing on the economic data calendar today. So we're going to probably switch our attention to US earnings this week. We've got about Well, over 150 of the S&P 500 companies reporting their earnings this week, okay? And in the absence of economic data, in the absence of a Greek crisis, now that the Chinese stock market has stopped collapsing, then attention's going to shift to corporate America. And so maybe it'll be the earnings season that takes the lead this week when we're thinking about trends and so on. All right, so these earnings will be beginning, of course, this afternoon. We've got Morgan Stanley and Halliburton. We've then got IBM reporting after the close tonight. All right, guys, enjoy the session. Thanks a lot.